Happy Friday, traders. It's 8:02 a.m. Chicago time on Friday, the 12th of January, 2018. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Am I blowing out your speakers this morning? Hope not. Let's take a look at the overall market stance right now. The S&P has pushed the overnight high to 2776.75, so we pushed by almost 7 points upwards into new all-time high territory overnight, and the market has pulled back now. We traded a lot at 75.50 and came all the way back to yesterday's close, which is at 2769.50. We'll go over the details here in a minute. There's a pretty big level, a double measured move in the about 74.50 to 75 quarter area. Watching out for that today. But overall, the market stance this morning, British pound is leading, up 110 pips, trading at 136.77, followed by the euro and then the Dow gold. So we have a mixed bag like we did yesterday. The yen is down 48 pips. The bonds are down 23 ticks, and the U.S. dollar is down again. The notes are down. The S&P is up slightly. The Russell, the Euro stocks, gold, the Dow. So like I said, it's a mixed setting coming into this morning. Things that could impact our trade today. This morning we had the CPI release. Looking at what has happened since that release, the market dropped. The SOC for CPI was 27.74.75, and the market has dropped all the way down to 27.66.75. So about 8 points on that release, and the market did not like the results there. So overall, the actual CPI release was in line. Retail sales came in weaker at 0.4 versus 0.5. That may have been the mover. But overall, the market did drop right after the number, and it's making its way back. Current resistance, short-term resistance in that area is around 72.50. We'll see how that gets treated. Fairly active from about 7:30 this morning Central, so the last half hour has been relatively active for this time of day. And we're coming into a release at 10 o'clock Eastern today. Business inventories for November, 0.4% expected, negative 0.1 prior. So the higher this number is, the worse it is. You don't want high inventories. Other than that, we have ECB Speaker Weideman at 11:30 Eastern. We have Fed Speaker Harker at noon, and we have Fed Speaker Rosengren right after the close at 4:15. That's about it for today. I want to take a moment to remind you that it is like Friday. Please hit the like button at the bottom of the video. If you're on YouTube, you really should be seeing us on YouTube. Please hit that like button now or before you leave. It does help me out a lot. Let's take a look at the review of yesterday's action, or yesterday's expectations. Here we go. So yesterday, the same idea. Do you ever feel like you're coming in here and you're just listening to the same Trader Bite over and over and over? Let me turn down the sound a little bit. It's just the same thing day after day after day, and it's pretty boring. But that's the market that we've got. So the primary expectation this morning was for a pullback to 27.50, 175 for a base, and then I'm looking for a push through the 2760. Remember, I talked yesterday about the impulse up, and then I'm looking for 2760 to be gone. New all-time highs. It did push farther than expected. It pushed to 2770. We pushed the all-time high by exactly 10 points, 10 handles, and so a lot farther than I expected. I expected the market to have about 10 points of range from 52 to about 62, and so that's what we got. Basically, here's how things shaped up yesterday. Let's move this. We had a clean opening swing yesterday. There we go. So there's the initial impulse right there, and then it pulled back through the mid, almost to the bottom. The low was 52.75. It turned 4 ticks ahead of the prior day's high, ahead of the anticipated level for support, and that's just common for this product now. And then we finally breached the IB high to fulfill the IB stat, and then we get a second impulse right there. Yesterday was all buyers. I didn't see a reason to get short. As I talked about, it's really not a market for getting short and holding. It will be one day, but not right now. Okay, so that's where we are. The thing to take away from yesterday's trade: once we moved out of the IB, we didn't even come close to auctioning back to the mid or VWAP. It shows a fair amount of strength. We finished with a weak high. We finished on the high at 69.50, just 2 ticks below the high. The point of control shifted outside of the initial balance. There's a fair amount of strength here. The expectation overnight is that we would continue, and the reason we expect it to continue is because the auction did not end. It just ran out of time. There's a difference there. I think I talk about that in webinar 2 or something. The auction, when it gets interrupted, tends to fulfill its purpose. Remember, the market is here to discover prices. That's its main mechanism. That's its main purpose. And so when it gets interrupted by something as simple as the market closing, there's a tendency to continue. So what we saw here on the close is that a market that just got interrupted versus a market that actually started to auction back down and find its equilibrium. It did not get done finding those sellers, so we expect it to push through and continue overnight, and it did. If you look at the overnight high, we continued 7 points higher than where we closed, 7.25 points. It's quite a bit, with the overnight point of control shifting to near highs. So there's no presence from sellers at all. So here's the overnight session right there. Overnight session. The European session kicks in. We immediately become bullish again. We have a buyer. We have balance down below. We have a double distribution profile. Okay. Volume is about twice what we would expect on a normal basis. And we hold on to this high all the way through until we get to the retail sales and CPI number, at which point we drop a fair amount. So we're coming back. Here it is, returning to the scene of the crime, returning above the mid of the entire session. The overnight session is very active. Buyers are in control, as we have spent a fair amount of the overnight session on top of yesterday's close. The overnight inventory is currently long, but the percentage is fairly balanced, in my opinion. We moved farther from yesterday's close to the high overnight than we did to the low overnight, and we've spent about an equal amount of time below yesterday's close as we have above. So the overnight inventory seems to be even. the delta on the overnight inventories to the short side. So I'm seeing sellers. I see that on my bookmap screen. There's the CVD right here. CVD stands for cumulative volume delta. The green is for small lots. Up to 28 contracts in the ES statistically are considered small lots, and the blue line is everything that's 29 lots or higher. And you can see that the markets, we don't expect much on the bigger size overnight, because the volumes, the volume versus the day session where the 28 lot comes from is a lot smaller. So we're looking at the green line, the CVD, and it's negative. It's been negative most of the session. So we just pushed through temporary resistance right here at 72.50, and we are back almost at the scene of the crime at the 7:30 release, which is around 74.50 or so. That's how things are shaping up. Back to our review. One more thing I want to do is take a look at the week in action. So what did we do this week? So remember last week we had that ridiculously stretched profile, multiple gaps, higher high, higher low. This week had a little more balance in it. I feel like this week it had some pretty decent opportunities. Here's what we've done from day to day. Monday, there's Monday, Monday, Tuesday, Wednesday, Thursday, and now we're on Friday. Thursday closing near high, so we expect higher. So we've had a pretty good auction going on with the return to the low. Wednesday put in a lower low to Monday, and then screamed up. That was a pretty good day. I showed you the trade from that day. And then yesterday was completely bullish. So we're coming into Friday after a pretty busy week. The range for the week has been pretty good. It's lower than I'd like to see, but who cares what I'd like to see? It's about 33 points versus 45. Maybe we'll put that 45 in today, get 12 points of range extension today. But it looks like the S&P is really gunning for the next century figure, 3,000, and everything is hunky-dory. We're in the middle of earnings. We just started earnings season, so expect more movement. Now, what are we expecting today? Guess what? It looks exactly the same as it does every day, with new all-time highs and a gap up. Open auction, slight response, holding the top, impulse up, push the overnight high for the overnight stat, and then I expect it to struggle at this double IB, double measured move here. But overall, I'm looking for 2770 to 2782. So that's scenario number one. Does that look familiar? I pretty much put that up every day. It seems it's very very monotonous, very monotonous. So that's the primary scenario. Secondary scenario, you guessed it, open auction, pushes up right away, gets its poke through the overnight high, attempts, fails, impulse down, gets down into the prior day's range, and then sits in the middle. It's Friday. We finish off the week by balancing out, by the longs balancing out into the weekend, balancing risk, and then we sit in the middle and we end up with a fairly Gaussian profile for the day. What I'd love to see, just so we can have a little bit of spring cleaning, is an impulse down, but that's hypo 4, scenario number 4 in this case. So that's where we stand right now. Again, I want to remind you, it is like Friday. Please hit the like button before you head out. It does help me. So find the thumbs up and hit it. Okay. Good luck today, and just keep it tight. It's Friday. Don't go into the weekend with a hole in your pocket by getting emotional with the market. Good luck, and I'll catch you Monday. Take care.